Hello, yeah, welcome back to my YouTube channel. It's so nice to be here again today. Please, if you are new here, kindly click the subscribe button. Please, to my returning subscribers, please don't forget to like this video. Thank you so much for always coming back. Please don't forget to like this video, share this video to every and anyone you know is going to benefit from it. And ensure you stick to the end because we're going to learn a lot today. Today's topic is very important because in the exam it carries 32 marks. So please, this video is super important. Actually, you watch to the end and you're going to gain a lot. And don't forget to use the comment section to ask your questions or let me know videos you'd like me to create. Just say something. Drop the love and the support. Thank you so much, guys. So let's dive into the video. Let's talk about what we're going to talk about today. So today we're talking about something that is of great importance. Like it's very important. Like I said earlier, financial statement analysis covers is 32 marks. It's 32 marks. I know 32 marks out of 100. That's like a lot, right? A lot. So it's a very important aspect of ICAN case study report, and not just ICAN case study report, but report writing. And if I've not said in my previous videos, I'd like to say here, case study is not just something that you learn to pass an exam. Case study as an accountant, as a business person, it's a way of life because you have to be able to analyze your financial statements. You have to be able to, analyze projects, appraise projects. You have to be able to assess what you're doing in the company, basically, because if you don't do all those things, how would you be able to make decisions? How would you be able to know where errors are? How would you be able to know where to improve? How would you know where to put control measures? So this topic is important, very important, especially as a chartered accountant. So financial statement analysis. So today we're talking about, I'll be telling you what financial statement analysis is, where you find the requirements in your case study, ICAN case study examination, how you will know if it's a financial statement analysis or not, because there's some signs that you need to know. There's some things that you would see that you will know, okay, this is what I'm supposed to do. Then common techniques that we have and common pitfalls as well. So let's start. What is financial statement analysis? Now, a financial statement analysis is simply an analysis carried out on the financial statements to assess the company's financial position, financial performance, and financial health. So that's just basically what a financial statement analysis is. As an accountant, financial statements are like the set of reports, right? Or you even have five components of financial statements. We have the statement of financial position, statement of financial performance, another comprehensive income, which is a statement of profit or loss, right? Another comprehensive income. You have a statement of cash flows. You have the statement of changes in equity, and you have your notes to the account. Now, all these make up the components of the financial statement. So, financial statement analysis is just basically analyzing the components of the financial statement, analyzing your statement of profit or loss, analyzing your statement of financial position, analyzing your statement of cash flows, and any other financial statement that is given in the case study you are considering. And when you're talking about the financial position, you get that the information about that is from the statement of financial position, right? Financial performance from a statement of financial performance, and financial health is basically from your cash flow. That's why okay, what is the inflows and outflows of cash from the operating activities, from the investing activities, from the financial activities. Okay, so let's stop there. We're not doing corporate reporting here or financial reporting. So let's leave that for that section. So basically, I just dabbled into it a little so that you can understand what we are saying. So analyzing the financial statement now is one thing to prepare the financial statement. In your corporate reporting, in your financial reporting, you are preparing the financial statement. You are adding up figures. You are trying to compute the profit. You are trying to compute the assets, the liabilities, and all of that. That we are trying to do in corporate reporting and financial reporting. But in ICAN case study, now the report has been completed. The statement of financial position has been prepared. You are not preparing it here. You are now asked, okay, we'll look at this prepared financial statement. Help us to analyze it. Help us to assess the company's profitability, for instance. Help us to assess the liquidity. Help us to assess the financial performance of the company. So that's basically what we're doing in financial statement analysis. So case study looks at analyzing the already prepared financial statement. Already prepared financial statement. Now, a financial statement analysis is carried out to assess the past events that have happened in the company. Now, from my previous video, which was on financial analysis, I explained to you how the major difference between financial statement analysis, financial data analysis, and the strategic analysis, where I explained that the financial data analysis, the financial statement analysis, where I used, if you have not watched that video, please check my channel. I created a video on financial analysis. That you should have watched that video before you watch this video, because that's like the foundation of everything. So financial statement analysis is a category of financial analysis. So please watch that video so you can understand. It's like the videos are linked together. So in the previous video, I was explaining that your financial statement analysis assesses the past events of the company. Financial data analysis assesses the current events that are taking place in the company, and strategic analyzes the future, the prospects of the company. So financial statement analysis is carried out to assess the past events that happened in the company. This is so because the financial statements are prepared and that will be presented to you for analysis are from previous years. And I was explaining earlier in my previous videos that a case of, the management are in charge of preparing the report, right? So after the management prepares the report, some will say the board of directors, some will say the management. Basically, so when they prepare the report, they will call in an auditor to assess the report. The auditor will take some time, right? So most times when the financial statement is published and made accessible to the public, it's not financial statement of what happened yesterday or today. Probably could even be financial statement that occurred, events that occurred months ago. That's why we have IES 10, where we have subsequent events, right? But that's not what we're going into. So basically, what I'm just trying to emphasize is that the financial statement you are given will be financial statements of events that have occurred previously. So that's why financial statement analysis is analyzing the past of the company, past events that happened in the company. And I explained here that this aspect of an ICAN journey is very important because as a professional accountant, you have to be able to analyze financial statements. Imagine you being in the board of the you being called to a meeting with your board of directors and they say, "Oh, chartered accountant, please help us to look at this financial statement. What does line item 5 mean?" And you are just talking gibberish. No, that's why you have this video. So that cannot happen to you, because if you stick to this video, watch it very well, understand it, ask questions. You won't be just talking off points. You will talk in alignment with what you will come out, and you will do well. Because as a professional accountant, like I said, you must know how to analyze financial statements. It's not just about preparing. So now the big question is, I know that I'm supposed to carry out financial statement analysis. Where do I find the requirements? Where do I find the requirement? Because you have to know where the requirement is, right? Like I said, most times the financial statement analysis is usually the first requirement. Yes. Now, I use the word usually because looking back at various case study exams that have occurred in the past few years, the requirement one is usually on financial statement analysis, usually, but anything can change. So it's not like, a status quo, or the examiner has no right to bend the question the way they want to. They can, but most times, usually the requirement one. But I don't just want you to just know it as requirement one, because what if they change it and you have just crammed it or requirement one is financial statement analysis and you just jump into it? So I'll tell you where to find the requirements, how to know, yes, this is the financial statement analysis I'm supposed to carry out. So now the requirements are usually found in the unseen. And I explained earlier that the unseen is the portion of the examination question that is reviewed in the exam hall. Now we have the pre-seen and the unseen. And it said the financial statements will have been given in the pre-seen. You will have been given in the pre-seen. Now, the pre-seen is when you say something is pre, you have seen it 2 weeks before the exam, and unseen is in the examination hall. You'll be handed examination question. So, in that examination question, it's comprised of the one you have seen 2 weeks. That means they'll publish a portion of the exam question 2 weeks before the exam date, and the remaining portion will be given to you in the examination hall. So most times the unseen is where you find the requirements. That's the portion that was given to you in the examination hall. That's where you find the requirements, the unseen. So the requirements are usually found in the first exhibit of the unseen. So in the first exhibit of the unseen, you'll see requirements most times. Now I'm using the word usually, so please don't cram me that, Omodesola said usually is the first exhibit, and I check the first exhibit, I'm not seeing anything there, and you become all confused. No, it's usually in the first exhibit. And if it's not going to be in the first exhibit, Just check every other exhibit that you're giving as well. Check every other exhibit that you are giving as well. It will help you. So now it may not always be the case, but most times usually the first few pages. So I was showing you November 2019 diets. November 2019 diet. So now let's look at what they told us there. Let's use another color because that color is pink. Yeah, that's good. Now, in this is an exhibit 7 that was given in November 2019 diet. Now, you were told, oh, as usual, the toy farms you were have as completed. So they have given you some information. You have to carry out a detailed analysis of the management account and prepare reports for the board. You have to carry out an evaluation and appraisal of the business proposals and recommend appropriate course of actions. So now in this paragraph, this one here, we have been told what to do, but now it was now broken down into two requirements. So this the reports, okay, please draft my review a report addressed to the board of DFPP, that's Detoy Farms and Products. So in this case study, you were to report to you're preparing a report rather, you're preparing a report for a company, Detoy Farms and Farm Products Limited. So you have to address the report to the board of DFPP, Detoy Farms and Farm Products Limited. So the report now should comprise of a review of the management accounts, and so the review should comprise of, can you see, revenue, costs, overheads, and across its revenue streams in comparison with the previous 2 years. And you were further told too that you should evaluate the impact of these changes on the operating profits. Please comment on the bank overdraft soon. So in this requirement 1, you were told to review the management account. Your review should comprise of analysis of revenue, cost, overhead. You should also look at the impact of the changes on operating profit and why is it that the company has bank overdraft even though they have huge profits. So all these things now was requirement 1. Second requirement, we're told to do an assessment of the contract supply service, and in Exhibit 10 and 11, we are also required to critically evaluate the proposed strategic business opportunity, the installation of meat processing plant by DFFP as contained in Exhibit 12, and discuss broader commercial and ethical considerations, as well as the risks that may be associated in accepting or venturing into these business proposals. So requirement 1, you are assessing the management account. Requirement 2, you are doing what? You are assessing you are assessing a contract and a business proposal. So now I was saying here that the image above shows the requirement of the case study. So this is just basically the requirement. So in the first few pages of your unseen, most times it's really in the unseen, they'll give you a requirement, and the requirements will come like this. So how do you know your requirements? How do you find your requirements? It's really like in an email like this. So you will see requirement 1 and requirement 2. So it's not a static thing that, okay, it must be like this. But over the years, this has been the trend. This has been the trend of how the requirements are being given in the examination. Do you understand? So if you have any question, just let me know in the comment section. And I said the first requirement is the financial statement analysis. How do I know? It's the financial statement analysis. Now, what do we say? Financial statement. When you say financial statement analysis, that's analysis of the financial statement. Now, requirement 1 talks about what? Management account, right? Management account. That means what? It's still a management account. It's still an account prepared by the management. An auditor has not reviewed it. That's the meaning. Right? So now they're telling you that you should review. When you see some, when you hear things like, oh, review management accounts, review, check for revenue, cost, overhead. Where else would you see that? In the financial statement, right? Your revenue of, for instance, now is a statement of, is going to be found in your statement of profit or loss. So you should check all those things: your costs, your overheads, the profits, bank overdrafts. When you hear things like that, you already know that obviously they're talking about financial statements. So you are what? Analyzing the financial statements. Do you understand? Do you understand? You're analyzing the financial statement. Now, the big question is, how do I know if it is a financial statement analysis or not? Because now you have just been given you have been given so many information overload is happening here. So how do you know if it's a financial statement analysis or not? Now, from the picture above, that picture I showed you, we are given two requirements. The first one is about the review of the management account, and the second is about assessment of contracts and business proposals. So now, how do you know? I highlighted some questions that you can actually go through. So you ask yourself these questions in examination hall. Assess these questions in examination hall. Do you understand? So when the answers to this question will help you to know what you're supposed to do, because you cannot just be doing something else, right? Because, like they say, instruction is part of what? It's part of examination. Instruction is part of examination. You can't just say, I feel like doing what I feel like doing. No, you have to work as per the examiner's requirements. So, how do you know is a financial statement analysis? Oh, right there, when I said it here, I said it here. That is a financial statement analysis. Oh, yeah, how do I know? How did I find out that is a financial statement? So, the clues, the tips that I used to know is what I'm highlighting here for you. Do you understand? So the first one now is, what do I need to do? Ask yourself, okay, what are they asking me to do? Now, the financial statement analysis involves review, always involves the assessment, review, or evaluation of the financial statement or management account. And like I said, management account is basically account that has not been audited, right? So now, the financial statement analysis will always involve an assessment, evaluation of financial statement or man. So when you are seeing anything like review, assess, evaluate financial statement, review, assess, evaluate management account, what's that? Basically a financial statement analysis, right? So you cannot be doing they cannot be asking you to review the management account and they're asking you for a strategic analysis. No, do you understand? Or they're asking you for something else. You review what you're analyzing, not that you're analyzing financial statements. So when you see anything related to management account or financial statement, then you have to carry out a financial analysis. Like now, if you see this now, they said what? A review of management accounts. And even every other information that is given here, revenue, cost, overhead, profits, bank overdraft, they're all in the financial statements, right? So you definitely know from that you're doing a financial statement analysis. You're doing a financial statement analysis. And the next question you ask yourself, okay, what do I need to do? Okay, I need to carry out a review on the financial statements, right? The second question you're going to ask yourself is, where can the information be found? Okay, the information that I need to carry out this assessment, evaluation, or review, where can I actually get this information? The information that I will need, right? Cannot just, obviously, they tell me to review something, that they need to give you a piece of information, right? Or they tell you to evaluate something, information somewhere within the examination question would be necessary. I'll be able to use a particular information, right? To review, assess, or evaluate that particular requirement. Abi? So the next question is, where can the information be found? Where will I find the information that I need? So from the picture above, you have to review management accounts, analyze costs and overheads, then evaluate the impact on of these changes on operating profits. The required information can be found in the financial statements. So everything is pointing at the financial statements. Review of management accounts, financial statements. Information that I need in the financial statement. So everything is pointing at the financial statement. So definitely you know you are supposed to carry out a financial statement analysis. Now note, any other requirement that does not fall in line with the above is either a financial data analysis or strategic analysis. If what you need to do is not related to the financial statement, then it is not a financial statement analysis. If the information that you will need to carry out that review, analysis, or evaluation is not going to be from the financial statement, then you don't have to do a financial statement analysis. Do you understand? So in subsequent videos, I'll be explaining financial data analysis and strategic analysis for you. But today, let's just stick to financial statement analysis because that's the topic for today. So let's just focus on that. So now there are some common techniques that you can use. Common techniques. Now many techniques can be used to carry out. There are so many innumerable techniques that can be used to carry out a financial statement analysis. But we're just going to be limiting them down to ICAN case study. So now they include the ratio analysis, the trend analysis, the horizontal and vertical analysis, comparative analysis, scenario analysis, so many and so forth and so forth and so on and so forth. In most exams, the two major techniques that are required include the ratio and trend analysis. In most exams, which might not always be the case, but over the years, in most exams, they require you to do a ratio analysis and trend analysis in most exams. Now, since we have so many techniques, and this is like the trend, like I said, now this thing is like a trend. In most cases, they can change it, but based on the trend, based on review of previous ICAN questions that have been tested. So I'm just summarizing the two major techniques that are being tested. So the first one is that we have the ratio analysis. Now, the ratio analysis, this is a financial analysis techniques technique rather that involves assessing the financial performance, position, and cash flow of the company. So ratio analysis is basically using ratios. In your previous, like from secondary school, you have ratio is like, oh, fraction. You have something like 2:1, 2:1. I mean now, which is also equals to what? 2 divided by 1, right? 2 divided by 1, 2:1. So this is like a ratio analysis. So yeah, like having like a division sort of. So ratio analysis is basically a financial statement analysis technique that involves assessing the financial performance, financial position, and cash flow of the company using what? Ratios. That's just a simple thing. So you're just using ratios to analyze it. You're using ratios to analyze it. And we have so many ratios. I gave some examples below. We have the liquidity ratios, which is used to assess the short-term obligations of the company. We have the solvency ratios, which is to assess the long-term obligations of the company. We have the what? The profitability ratios, which is assessing the company's ability to generate profit. We have so many and so on. There are so many ratios. So these ratios we use to analyze the company, but in some cases there can be general requirement and specific requirement. General requirement is just evaluate the financial performance, evaluate the financial statement, evaluate the management accounts with whatever technique you want. But some specific requirements come. Like now, in the requirements we are talking about today, the November 2019 diet, we asked to check the revenue, the costs, the overhead, and bank overdraft. There are so many other things we have in the financial statements. But then that was the area we're asked to look at. We have the asset, the land and building, the plant and machinery. We have so many, the stocks, the debtors, the short-term liabilities. But then they told us that we should focus on what? Revenue, costs, overhead, impact on profit, and bank overdraft. So you have to work based on what the examiner requires, not based on what you know. Do you understand? Like I said, please, examination instructions are part of examination, please. Okay. So the second major technique is the trend analysis. So this involves analyzing financial statements to identify patterns or trends that have occurred over a period of time. Patterns or trends that have occurred over a period of time. Trend analysis is a technique of financial statement analysis that is possible if you are given a financial statement or for more than 1 year. It involves determining the percentage change of financial statement line items. So basically, trend, when you hear the word trend, or what is the trend these days? What is the current events that are occurring these days? What's the current pattern of things these days, right? What's the trend of things these days? So a trend, when you say you're doing a trend analysis, that means what has happened over time. The company wants to know, okay, what is the change as our revenue increased from 2019 to from 2019 to 2020? Has our costs increased so that we can know what? So when we know that, okay, revenue has reduced, but cost is increasing. Wow. Okay, should we increase our marketing strategy to create more sales? Okay, probably is it that our products are substandard and we're now using inferior items? That's why people are not buying it. Okay, our cost is high. What are the control measures that we can put, cost control techniques that we can actually implement, right, to reduce that cost? So the company uses that information, like the information you are giving them, they are going to use it to what? To make decisions. They're going to use it in their planning. So trend analysis too is something that is very important. So when they can assess the trend of things over time, what has happened over time, to be able to what? To be able to make decisions. So, but trend, you cannot be assessing trend, or if you have financial statement of only 1 year. Revenue for this year was 200,000. How do you know if that's increased or decreased? That's when you compare with something else. And what's that something else? You're comparing it what? Another year. Right. So trend analysis is only possible if you are giving financial statement of more than 1 year. So that's like the two major techniques. So most times they'll tell you when they're asking for financial evaluations like that, financial statement evaluation, most times they will require you to do a trend analysis rather, or a ratio analysis, as the case may be. So now, what please the other techniques, please, like I said here, we have the horizontal and vertical technique analysis, we have the common size analysis, comparative analysis, scenario. We have so many, but these are just the two major required techniques are just what I highlighted in this video. So, but there are so many others, so many others. So, what are the common pitfalls? What are the common issues that students have? Now, the first one is wrong technique. Wrong technique. This cannot be overemphasized. Wrong technique. Ratio analysis is not the only technique that can be implemented. There are several other techniques. There are several other techniques, like I explained earlier. Ratio analysis and trend analysis is not the only techniques that you can implement. There are so many others. There are so many others. And the technique you use should depend on the requirement of the case study. It should depend on the requirement. So most students believe that every case study must do ratio. It's not always the case. Based on the requirements, please follow the requirements based on what is asked of you, but based on what is required of you rather. And that thing is poor interpretation. Poor interpretation, the why. Now, I called it the why is because you cannot just tell us revenue increased by 20%. Revenue increased by 20%. Okay. Can you tell us why? Because we as a company now, we're trying to what? We're trying to make decisions. We're trying to make our business better. We're trying to increase our business, right? But if you're just telling me that revenue increased by 20%, that's not information. That's not information. Because you're not telling me what I did right. You're not telling me what I did wrong. You're not telling me why my cost is high. You're not telling me why my revenue is low or why my revenue is high, why my cost is low. You're not even giving me a reason. Then information is not being passed across. So you have to what? Interpret well. You have to tell us why. As much as calculations and interpretations matter, it is very important to interpret results properly. Marks will be lost when interpretation is poor. For instance, I give an example. For instance, you cannot say profitability ratios show that the company is weak. How is that? How is that shows that the company is weak? Okay, weak. Okay, in what area? Okay, weak in which actual area? There's so many profitability ratios. So many. Okay, is it gross profit margin? Okay, is it that we're weak in terms of our direct costs? Okay, is it net profit margin or operating profit margin? Is it that we're weak in terms of managing our overheads? Which area exactly? That's like too broad. So you have to what? Tell us why. Be specific. Tell us why. So that when we are making decisions in the next for the next period or the on decisions in the long term, we would know that okay, so our gross profit margin was very low because what our cost was high. So the gross profit has declined, or okay, or is it that our overheads are not being we're not maintaining our overheads very well, we're not minimizing them very well. So it's very high, so it's affecting our profit. So in the nearest future, we'll be able to put measures in place. So you're a professional. You have to tell the reader why. And I was saying something here that this can only be done when you assess trends in the industry. Trends in the industry, internal events that happen in the company, all other information made available in the case study examination paper. Now, in the case study, you can have more than 20 pages. It's more than 20 pages question paper. All those pages are not relevant. They're not relevant. They're telling you about the company. They're telling you about the industry. So that you can know, you can be able to determine why profit is reducing. Okay, maybe for instance now, the car making company now or car manufacturing companies, maybe there has been a trend of issues in the car manufacturing company or industry, and that's really affected the manufacturers there, and profit has been on the decline. People are not buying cars anymore. People can now fly. So let's say people can now fly, so people don't need car anymore. So I can easily say, oh, I'm going to the market, I carry my wings, I fly. Maybe there's something like a technology that can make us fly. So people may not necessarily need cars anymore. So okay, so when you have assessed the industry, when you have assessed the internal happenings of the company, you'll be able to know, okay, the reason now profitability ratio show that the company is weak because of the recent happenings in the car manufacturing company, where cars are no longer and why customers are no longer patronizing car manufacturing companies, rather they're patronizing um, wing companies, automated wing companies or something. Do you understand? So when you know the trends that happen in the industry, when you know what's the internal happenings of the company, you'll be able to determine why some issues are happening. As a professional, you'll be able to assess it. That's why case studies about assumption, but realistic assumption with justification. With justification. So that's why when they give you a pristine, look at the company you are, the industry, the company you're actually considering. Which industry are they currently? So that industry, read on it. What are the advantages? What are the highs? What are the lows occurring in the industry? Be able to what? Interpret well. And that thing again is poor structure. Poor structure. Now, there's no particular structure for I can't say so, but then you cannot just be arranging your work anyhow anyway, even if there's no particular structure. You cannot just be arranging your work anyhow, even if there's no particular structure. You have to arrange it under headings. Now you can decide to arrange under headings, you might not decide to arrange under headings. That's actually totally up to you actually, but just make your work neat. Because you cannot be talking about, for instance, profitability ratio. We have gross profit margin, we have maybe ROCE, the return on capital employed. So you cannot be telling us return on capital employed is so full stop. You now go to gross profit margin is so full stop. Return on gross profit margin, return on capital employed is so. They're going forth, sideways, left, right, center. Everything is just scattered. I don't even know. No, you have not finished telling me what is happening to gross profits. You have not finished telling me, okay, am I making high returns or low returns on my capital employed? It's just scattered. I cannot even assess. I can't even understand or comprehend what you're saying. So you have to actually arrange this in a structure. And you can do it under headings, you may not do it under it. So that poor structure whereby they cannot deduce the information you're trying to pass across, that also affects. Then another important common pitfall is what? Missing requirements. Missing requirements. Because requirements can come in multiple folds. Now look at this November 2019 that we're talking about. We're asked to what? Look at it. Look at it. We have to what? Assess the revenue, assess cost, assess overhead, assess gross profit, assess the bank overdraft. So now if you only assess revenue and cost, you have lost marks that could be awarded to overhead. You have lost marks that could be awarded to impact of changes in operating profit and the huge bank overdraft. So you have to what? You have to do everything. Don't just focus on the past because you will lose marks. So those things are actually very, very common issues that students actually face. So that's all for this video. So today we discussed what financial statement analysis is, like what it's about. We talked about how you can find the requirements in your case study report. We talked about the the areas you can know or the questions you can ask to know if it's a financial statement analysis or not, the common techniques that are being used, and common pitfalls. Please don't be a victim of these pitfalls that's affected a lot of students. And so most students are fail, not that they don't know what they're doing or they don't know what to write, but all these pitfalls actually can cost you a lot of marks. So that's all for today's video. I hope you learned a lot. Did you learn a lot? Let me know in the comment section. Okay, let me know in the comment section if you learned a lot today. Please, if you haven't subscribed, please subscribe to my channel. Like this video, comment on it, share this video to everybody that you know, and turn on your notification bell so you would be informed of new updates. So thank you so much. Thank you, my new subscribers. Yes, I call you new subscribers because I know even though you are new here, I know you have subscribed today. Thank you so much for subscribing. My existing subscribers, thank you so much for stopping by. Thank you. Till we meet again. Bye.